Hello guys, welcome to the video lecture on Introduction to Accounting. So our topic in today's video is about errors in trial balance. Now, with reference to errors in trial balance, there are two major concepts which we require to understand. The errors that affect the trial balance and errors that do not affect the trial balance. So there are two major points of discussion with reference to certain errors which do impact the trial balance, and there are certain errors which do not affect the trial balance, and we are going to discuss on both the topics. So let's discuss on errors that affect the trial balance. Point number one talks from the point of view of wrong posting or omission of posting. Now it means what? Now this error is when only the debit or the credit included, thus leaving out the other part of the entry, which means to say for example, if the journal entry is if business transaction is cash sales rupees 50,000, which means cash account debit to sales, you have recorded in one part of the ledger, but the other part in the ledger the transaction has been left out. So this kind of mistake is what is said to be wrong position or omission of the posting. Omission of the posting, you have missed out the posting in one of the ledger account. Now naturally your sales account, as per this particular example, the total will not match and thereby the trial balance will not match. So we use a term which is known as a suspense account in order to match the trial balance, and this suspense account requires further adjustment while we do final accounts. So in order to match a trial balance, we use a term suspense account if there is any wrong position or omission of posting in our trial balance. The errors that affect the trial balance can also happen because of wrong entry or omission of entry in a journal, but correct posting in the ledger. Let's understand this example again. Cash sales of rupees 5,000. Journal entry should have been cash account debit to sales account. Unfortunately, a wrong entry has been passed, cash account debit to sales return account. But correct posting has been done. In cash account, cash ledger account, correct posting has been done in the ledger. As well as the sales return ledger account, correct posting has been done. But the problem is with the journal. The journal should be cash account debit to sales, which has been wrongly passed as cash account debit to sales return. Thereby your sales account will never ever match, and thereby your trial balance will not match. The third error that affects the trial balance is posting of a transaction to the wrong side of an account. Now we take the same example into consideration where cash sales is rupees 5,000 and the journal entry is cash account debit to sales, and we are aware of sales will be recorded in the cash ledger account debit side and cash account will be recorded in sales ledger credit side, but we see that sales has been recorded wrongly on the credit side of cash account. Thereby the cash balance of the cash ledger account will be wrong and my trial balance will not tally. Errors that affect the trial balance might also happen because of errors in balancing a ledger account. The correct balance should have been 14,000, but you were careless and have done a mistake while drawing the balance, and thereby you have written down 13,000 as the balance of bank account, which correct figure should have been 14,000. And thereby once you are doing a trial balance, you will find 1,000 rupees short on the debit side and your trial balance will not tally because the mistake which you have done is relating to balancing of the ledger account, correct balancing of the ledger account. The other two errors which might also happen is of errors of omission in recording a ledger account balance in a trial balance, and recording of a ledger account balance might be twice in a trial balance. Now what does it mean? The example says that there is a bank ledger account which has a debit balance of 14,000. Point number one, error of omission, completely not recorded in the trial balance in the first instance. Second instance example is that the bank account balance of 14,000 has been recorded twice in the trial balance. So thereby either you omit or you record it twice, your trial balance will never tally. So these are few of the examples relating to errors that affect the trial balance, and your trial balance doesn't tally, and we use a term suspense account in order to tally the trial balance. Now let's discuss about errors that do not affect the trial balance. We do make mistakes, but the trial balance ultimately tallies. Let's discuss the first point, errors of omission. Now it means that a transaction that has been omitted from the books of accounts, that means completely omitted from the books of accounts. Now, when a transaction is completely left out, it means both the debit and the credit side is not impacted, because we were discussing about cash sales, cash account debit to sales. we completely have omitted the transaction. We haven't recorded the transaction, neither in journal nor in ledger, which means to say there will be no impact in the trial balance because neither the cash account nor the sales account got impacted. So your debit and credit doesn't get impacted, therefore your trial balance total doesn't change, and therefore you do not find your mistake. So this is what is said to be errors of omission. The next type of errors which might happen, which do not affect the trial balance but is a mistake, is errors of commission. Now what it means? It means that a transaction, instead of being recorded in the right account, has been recorded in a wrong account. So the correct entry for a transaction where purchased goods from Mr. X was wrongly entered into Mr. Y's account. So the correct entry should have been purchase account debit to X. But while you are posting in the ledger account, you have opened a Y account and have passed on the purchase transaction there in Mr. Y's account. Your trial balance will tally because Mr. X account should have been credited. Instead of X, you have credited Y account. So Y account is there in your trial balance. So purchase is debited, Y is credited. So ultimately your trial balance tallies. But there has been a mistake done with respect to identifying the right account. It should have been X account. You have recorded in Y account. This is said to be errors of commission. The third error is errors of principle. Now this is a common mistake done by accountants or students who are studying this particular subject because they were not aware of the fundamental principle of accounting, and that is the reason why such kind of mistakes normally happen. Like for example, if you say purchase machinery, we normally say machinery account is debited. But in case of purchase machinery, somebody has debited purchase account because of, again, the fundamental principle is not clear. So this is an example of error of principle. See, if machinery account was debited, machinery being debit, cash is credited. So machinery going high, cash going down, ultimately there would have been an impact in the trial balance. Now what happens? You in place of machinery, you have used purchase account. So purchase gone high, cash gone down, the impact remains the same. And that is the reason why your trial balance tallied. But you know there is a mistake you have done, which is not being reflected in the trial balance, but is reflected in your journal. The correct entry should have been machinery to cash, and you have passed purchase account debit to cash. A very common mistake which is normally done is errors of original entry. Now it has been mentioned that purchase goods of rupees 30,000 by cash. Now everything is right. The journal entry is right. Purchase account debit to cash. But unfortunately the amount written 30,000 has been represented as 3,000 in the journal and has been posted in the ledger. Now your trial balance will tally. Taking into consideration 3,000 rupees, the trial balance will tally. But you are aware of the fact that you have purchased goods worth rupees 30,000 by cash and not 3,000 by cash. So even if your trial balance tallies, there is a fundamental mistake which you have done with respect to errors of original entry. The last error is what is said to be a compensating error. Now what is a compensating error? Let's take an example. Purchase account has been overcast by rupees 1,000 and sales return has been undercast by rupees 10,000. So let me explain you what we mean by the term overcasting and undercasting. Overcasting means when you have recorded the amount which is higher than the actual amount. So for the example, the actual amount should have been 1,000. You have recorded 1,500. So you have overcasted it. Similarly, the actual amount was 1,000 and you have recorded it as 700. That means you have recorded less amount. That is what is said to be undercasting. Now it has been said that purchase has been overcasted by 10,000 rupees. So you can understand your debit side, since purchase is an expense, your debit side is 10,000 rupees more than your credit. On the other side, sales return book is undercasted by 10,000. Now sales return, sales is credit, sales return has to be debited. Now sales return, which is on the debit side, has been undercasted by 10,000. So you have purchase on the debit side which is overcasted by 10,000. Sales return also on the debit side undercasted by 10,000. Ultimate effect is zero. Because on one side you have overcasted 10,000 on the debit side. On the other side you have reduced 10,000 because you have undercasted 10,000 with reference to sales return on the debit side. Overall impact is zero. So this is what is said to be a compensating error. So I hope you have understood the errors which have been classified as two broad heads. Errors that affect the trial balance and errors that do not affect the trial balance. This is one of a very important concept which is normally set in the question paper across all universities, irrespective of whichever university you study. This is a particular question which is quite important, which is very, very important from the point of view of trial balance.
So errors that affect trial balance and errors that do not affect the trial balance. I hope you have understood the concept. Till then, thank you. Have a nice day.